Now we will talk about another topic, waiting incoming orders. Waiting incoming orders. The amount appearing on the customer's ledger account at any time. At any time will of course result from invoicing the order he has placed, so that if the value of order in any period were to exceed the original forecast, this might not become apparent until after invoicing. At the time, the outstanding balance on the ladder would suddenly be found to be excess of the agreed limit. To safeguard against this possibility, an order register may be kept for each customer, showing the value of orders placed for delivery in particular months. Each incoming orders will then be checked against the register to confirm that it will not cause the credit limit to be exceeded. This could be a cumbersome procedure, and normally it would only be used in respect of a new customer whose compliance with credit limit has not been established. Point B. Customer who had consistently failed to adhere to their credit limits in the past. It might be better in such cases to withdraw credit facility completely. All incoming orders should be checked to ensure that are placed on the customer's official order form and authorized by somebody purporting to have the power to place that type of order. Computerization has made this task very easy. Now we will talk about the sales invoicing. So far as the customers concerned, the company's credit period does not begin until he receives an invoice. Even then, his accounting procedure probably involved a monthly cutoff date for the receipt of invoices, so that any invoice received after, say, the 28th day of month will be treated as belonging to the succeeding month. It's important, therefore, that that delays in invoicing be kept up to a minimum. The causes of delay are nearly all time within the control of the company and may include: point A, in inflexible routine in the sales invoicing department. Perhaps invoices are issued only on certain days in the month. A requirement of approval of signature of sales invoices by member of the sales staff who are often away from the office. Point C. Failure to agree prices for special work, and point D. For job work, and in other cases where prices are linked with costs, excessively slow procedure for calculating costs. I will talk about another topic, debt collection. Now we'll talk about another topic, debt collection. There must be no slackness in pursuing the collection of debt. The most business in most business purely formal reminders are ineffective, and therefore a waste of money. Where an account has passed its due date, there should be early proposal account with the customer either by telephone or a salesman's visit or by a letter addressed to a named person in the customer company. If necessary, there may be a follow up at the higher level of authority, and this should be followed by a threat to cut off supplies. The value of legal action against debtor need to be assessed. When this stage is reached, the likelihood of the customers paying is sharply reduced. And additional legal costs may never be recouped. On the other hand, the action may deter potential future defaulters. From the point of view of the salesman, every customer is valuable. From the financial director's standpoint, the marginal contribution from goods sold to a late payer will be more profitable without sales to that particular customer. Overdue debts should be the subject of formal discussion between the sales and financial manager. The reasons for delayed payment should be noted, and should be my mini decision should be minuted on the action to be taken in each case. The people responsible for taking it. Although the salesman's job is not complete until his customer has paid the money due. It is often advantageous for the more rigorous rigorous collection procedure to be handled by finance staff. Leaving the salesman free to exercise his persuasive influence with the customer's buying department. Credit and collection procedures. In the previous section, we considered the firm's overall credit and collection policies. In this section, we shall discuss how these policies can be applied to individual account. In this section, we shall first discuss sources of information and then the discuss decision to grant credit. Finally, we shall look at specific procedure that could be utilized to collect delinquent accounts. Now we'll talk about another topic, source of information. Source of information. Another topic, source of information. An individual or firm is requesting credit. What source of information are available to judge the credit worthiness of the applicant? Sources that can be utilized are financing statements, bank reference, and bank credit bureaus.